Welcome back to our channel. Today, we're talking about getting rich. Not just like, I can buy a boat rich, but I never have to work another day in my life rich. This is about building wealth the smart way, through assets. We're diving deep into the 8 assets that can make you seriously wealthy, potentially wealthy enough to never work again. It takes effort, research, and dedication, but the rewards are worth it. If you're ready to start building your own path to financial freedom, smash that like button, hit subscribe, and let's get started with asset number 1. First up, we're talking about real estate. And let me tell you, this is a big one. Everyone needs a place to live, right? Investing in properties can build wealth. Buy a property, rent it out, and you've got passive income. Real estate can appreciate over time. Your investment can grow significantly. Start small, explore partnerships, or look into crowdfunding platforms. Real estate is a proven way to build wealth. Next up, let's talk about stocks. Investing in stocks means buying a small ownership stake in a company. It's like owning a tiny piece of Apple or Tesla. As the company grows, your shares can increase in value. Many companies also pay dividends to shareholders. The stock market can be volatile but trends upwards long-term. Don't panic sell, focus on long-term investments. Research and seek advice from financial professionals. Knowledge is power in the stock market. Alright, let's move on to bonds, the more conservative cousin of stocks. While stocks represent ownership in a company, bonds are more like loans that you give to a company or government. In exchange for lending your money, the borrower agrees to pay you back the principal amount plus interest over a set period of time. Bonds are often seen as a less risky investment option compared to stocks. They generally don't experience the same level of volatility, making them a good option for investors looking for a more stable return. Bonds can provide a steady stream of income and help balance out some of the risks associated with stocks. Think of bonds as the reliable, steady edge of your investment portfolio. Let's be real, not everyone has the time, energy, or desire to research individual stocks and bonds. That's where mutual funds come in. Think of mutual funds like a basket of stocks, bonds, or other securities managed by a professional fund manager. The beauty of mutual funds is that they offer instant diversification. Instead of putting all your eggs in one basket, you're spreading your risk across a variety of different assets. Mutual funds are a great option for investors who are just starting out and might not have a lot of money to invest. They allow you to gain exposure to a wide range of investments with a relatively small amount of capital. Next up, we've got index funds, and let me tell you, these are my personal favorites. Index funds are similar to mutual funds in that they track a specific basket of assets, but there's one key difference: index funds are passively managed. Instead of trying to beat the market, index funds simply aim to match the performance of a particular market index, like the S&P 500 or the Dow Jones. This passive approach has a couple of major advantages. First, it keeps fees super low because you're not paying a fund manager to actively pick and choose investments. Second, index funds have a history of outperforming actively managed funds over the long term. They're simple, effective, and allow you to capture the long-term growth of the market without any hassle. REITs, real estate without the headaches. REITs, or real estate investment trusts, are a way to get in on the action without having to deal with the hassle of being a landlord. REITs are companies that own and operate income-producing real estate properties, such as shopping malls, apartment buildings, and office spaces. By investing in a REIT, you're essentially buying a piece of these properties and the income they generate. One of the biggest advantages of REITs is that they offer a way to invest in real estate without having to put down a large down payment or take out a mortgage. Plus, REITs are highly liquid, meaning you can buy and sell them easily on the stock market. Peer-to-peer lending, be the bank, reap the rewards. Peer-to-peer lending platforms, like Lending Club and Prosper, connect borrowers directly with investors, cutting out the traditional financial institutions. As an investor, you can browse through loan requests from individuals and businesses and choose who you want to lend your money to. You earn interest on your loans, which can potentially be higher than the interest rates offered by traditional banks. Borrowers can default on their loans, so it's crucial to diversify your investments across multiple borrowers to mitigate your risk. If you're comfortable with a bit more risk and looking for potentially higher returns, P2P lending can be an intriguing option. Intellectual property, turning your ideas into gold. This category includes assets like patents, trademarks, and copyrights. If you're a creative person or an innovator, this one's for you. Imagine writing a hit song, developing a groundbreaking invention, or creating a recognizable brand logo. These are all examples of intellectual property that can generate significant income for their creators. Building a portfolio of intellectual property takes time, effort, and often a bit of luck, but the financial rewards can be substantial. There you have it, 8 powerful assets that can help you build wealth and potentially never have to work again. Building wealth takes time, effort, and a willingness to learn and adapt. If you found this video helpful, give a thumbs up and subscribe to the channel for more financial freedom tips and strategies. Now go out there, start building your wealth, and live the life of your dreams. I'll see you in the next video.